another trading day right here in Lagos, Nigeria. It's time to give you the intel before you make that trade, and definitely we've seen a lot of happenings right there in most of the markets that we track. Some big moves overnight there with geopolitics on the front burner. But let's get to the top stories that set your agenda now, starting with oil. And yes, it was quite a dramatic play there. $68.73 a barrel. Just like that, we see Brent losing that $70 level, 3.85% drop this morning. WTI crude not left out there, bigger drop, that $65.91 a barrel there, moving farther away from that $70 level. So, and definitely it's all about reactions and what's playing out right there in the Middle East. That we'll get a drill down on what to expect if this is actually sustained this week. Two other stories now. We see the Senate has directed the Nigerian Customs Service to raise its revenue target for 2025 from 6 trillion to 10 trillion naira, citing the urgent need for enhanced enforcement and surveillance amid rising smuggling and insecurity challenges across the country. The chairman of the Senate Committee on Customs, Senator Issa Jibrin, stated this when the NCS appeared before the committee to defend its 2025 budget. In the same vein, the House of Representatives Committee on Customs and Excise has also directed the NCS to stop collecting 1% comprehensive import supervision scheme levy and 7% cost of before the 1st of July this year. Chairman of the committee, Leke Abejide, who gave the directive, says the only legal collection for the funding of the service is the 4% free on-board levy. And the Federal Airports Authority of Nigeria, that's found, they've disclosed plans to increase tariff of all service providers across its airports. The authority has also said it will stop collecting cash at all payment points as part of its efforts to boost revenue generation. Speaking during the Directorate of Commercial Development Stakeholders Engagement Forum in Lagos, the Director Commercial and Business Development at FAN, he also confirmed that 92% of its revenue comes from aeronautical sources, while only 8% is generated from non-aeronautical sources, in contrast to other developed countries, which generate over 40% from non-aeronautical sources. And while the president was busy commissioning projects, the vice president, Kashim Shettima, was also busy advising African countries to integrate their informal sectors into the formal inter-trade framework. The vice president was speaking at the opening of the 4th African Union Micro and Small Medium Enterprises Summit holding in Abuja. He charged the public and private financial institutions in Africa to establish strong credit schemes, trade-blended finance models, and regulatory environments that rewards innovation while protecting, customers. Our state correspondent, Emperor Simon, filed this report.
Nigeria is hosting the African Union MSME Summit for the first time, and Vice President Kashim Shettima leads the federal government's team. Policymakers, investors, and industry players from across Africa are attending the summit, which aims to promote the growth of businesses on the continent.
In the following 2 days, we must therefore engage in robust discussions, share best practices, and forge strategic partnerships to harness the power of digital innovation, to enhance competitiveness and operational efficiency of our MSMEs, to unlock new and expand existing market opportunities.
Digital innovation is no longer a luxury, but a necessity for African MSMEs. The COVID-19 pandemic accelerated digital adoption across the continent, and we must build on this momentum.
So that question is
at a fireside chat, Nigeria's Minister of Trade and Investment highlights efforts of the current administration to promote investment in the country.
Mr. President, as the Chief Investment Officer of this economy, in 2 years has galvanized over $50 billion of foreign investment announcements, and it's our job at the ministry, through agencies under us such as the NIPC, to track and to make sure that that money comes home.
Despite their contributions to the economy of most African countries, Micro, small and medium enterprises across Africa are bedeviled with the challenges of financing, access to market, among others. Vice President Shatima therefore calls for collective action to change the narrative.
Public and private financial institutions must shed all biases and see MSMEs for what they truly are, partners in development. We must establish strong credit guarantee schemes, create blended finance models, and build regulatory environments that reward innovation while protecting customers. This is how we make them bankable.
High point of the event is the recognition of the Special Advisor to the President on Job Creation and MSME, Mr. Tolani Adekunle Johnson, as the Special Advisor to the African Union's 6th Region on Job Creation and MSME. The event also provides opportunity for businesses in Nigeria to showcase their goods to the guests, including Vice President Shatima, who tours the exhibition area. From the Presidential Villa, Emperor Simon, Channels Television News.
And now to our first conversation. Today's fast-changing economic environment, the need for real-time labor market data and evidence-based decision-making is more critical than ever. And we see in Abuja right there, it's all about boosting MSME growth right now and getting the informal businesses, getting them, some attention, at this point there. Well, to help us unpack all of this, we have Feishayo Layonde. She's the CEO of Lagos State Employment Trust Fund, joining me right here in the studio. It's good to have you.
Thank you, Ladi. Thanks for having me, and good morning. And
good morning
to Lagosians as well.
Yeah, so,
Happy Tuesday.
Yeah, happy Tuesday. At this point, the week is moving, fast. There's so much happening. Yeah, the year. Exactly.
Already H1 wrapping up.
And we see geopolitics, shifting markets, at this point. But right now in Abuja, it's all about MSMEs. In Africa, we're hosting the 4th one here. And, talking about boosting MSME growth, how critical, in your view, is data, about labor market, in actually helping MSMEs, make the right choice, when it comes to employment and all of that?
Fantastic. Thank you very much. I'll do a brief introduction to LSETF. So our mandate is to create job opportunities in Lagos State, right? So we support the ecosystem, both on the entrepreneurship side and the employment side. But the whole idea is everyone should have access to livelihood. Everyone should have access to a job. So whether you're on the supply side of labor, on the demand side of labor. But speaking specifically to the labor market information system, we launched this last year. In 2024, Governor Sanwo-Olu launched this at our employment summit. And since then, we've had very positive engagements where people have reached out to us to ask, what do we do with this amount of data? And so the question you asked is very, very paramount, because as an MSME, what sets me up for success beyond access to finance, access to infrastructure, is actually who I employ to help me sell my produce or get my services out there. So what we say to MSMEs is, don't take this decision lightly. Make sure you use insights into data that's available to you to make those decisions. And starting with, what skills do I need? What skills should I be looking out for? We realize over time that some people apply for jobs and they don't necessarily meet the criteria, but they still apply. But then the MSME who's hiring...
Maybe God might help you get the job.
Yeah, exactly. But the MSME who's hiring them is becoming desperate and just taking that person. We're saying no. Actually be very clear on what it is you're looking out for. So for job seekers, we always say, don't underestimate doing your research. Don't underestimate getting power of mentorship. And for the MSMEs, use data and insights to actually make those decisions. And make it from a sense of let that data help you make an informed decision.
Right.
Exactly.
And what would you say inspired setting all of this up, and getting all of this data?
So if you recall, I had highlighted what our role is in terms of job creation. And over time, LSETF was set up 8 years ago, almost 9 years, will be 10 years next year, and realized that whilst we give access to finance, access to market, access to infrastructure, there's a lot that we have from a data repository point of view that it can't just be useful to us. It has to be useful to everybody else. And this was initiated by Ministry of Economic Planning and Budget, and saying that LSETF can work with the Ministry of Wealth Creation to actually get this data from both the demand and labor demand side of labor and the supply side of labor, to actually ensure that certain decisions are made centrally. So that's really what inspired this, to say let's have one central location that pulls in data from employers out there, that pulls in data from policymakers, that pulls in data from the educators, so universities as well are plugged into this, so that the person that's coming out of NYSC already knows, okay, if I want to work in this sector, these are the skills I need to have, without even having to go too far. It's information at your fingertip. And I should highlight at this point is LagoSLMIS.ng, LagoSLMIS.ng, and that's the site anyone can go in to find out that information.
Right, so what can I find out, on that website? Can I, get data on who's the amount of unemployed people in Lagos?
You can get that as well. You can actually get, from a job seeker perspective, you can actually get what skills are paramount. You can actually get, the wages. For example, we found out very recently that the average wage right now is about 125,000 naira. 125,000 naira. And in the reality is, things are getting tougher. So we need to encourage employers to actually find a way to increase that threshold if possible. Work with policymakers to make sure that people don't even pay below the minimum wage. Those are the kind of information that's in there as well. And then for students, I give the scenario of what it is, what skills are out there. And then even when for example, I want to be an accountant, understanding that even after I finish my accounting degree, what are the industries I should aim for? Because as an accountant, there are different thresholds if you're practicing accounting in an engineering field or practicing accounting in a manufacturing company. So it helps you make that informed decision from the comfort of your home without necessarily having to, break a bank or take, just doing things the right way. And another thing we always say is for those that put job offers out there, I know people say, but we have LinkedIn. I agree with you, but it's beyond just LinkedIn. It's actually consolidating all of those job offers in one place to help people to make that decision.
Right, so, and talking about wage growth, we know that has not matched up, with inflation rates and currency devaluation and all of that. Yeah. Do you think employers are keen, on raising compensation?
Very good question. So we've had what we call public-private dialogue. So we host PPD sessions with our partner GIZ, the German consulate bank, the German government, sorry. And we realized at these PPD sessions where we pulled in employers, we pulled in certain employees, we pulled in the youth, we pulled in policymakers and asked these pertinent questions. And employers are saying, if we're getting value and we know that that person will be retained, we're happy to pay that. That's a very interesting insight. But guess what? People are skeptical because I hire you today and you leave after 6 months. And you leave after 6 months because you found a better offer. But as the employer, if you took your time to do the due diligence around that role, you could actually benchmark it in such a way that the role is attractive, you have the right retention strategy for your HR team, and then you can put that role out there so that person can actually stay in that job. So it's a whole culture shift for the employers and the employees, but ultimately starting with the data that's available on LagoSLMIS.ng.
Right. So, looking at, Lagos State, at this point, we have a lot of businesses that want to come and set up shop.
Here every day.
In Lagos. So, are you saying the labor supply matches demand, at this point in Lagos?
I think the demand is definitely more, but the jobs are out there. The demand is definitely more. I'm not going to lie to that because we even have a lot more people that are transitioning from being an employee to being an entrepreneur. We see that every day, and vice versa.
They've called it the hustle economy.
And everyone, but it's a good thing because everyone's ready to work. Everyone is ready to do something, and you can transition. The opportunities are there. But we've seen from our data that the job offers are actually there. People just need to plug in the right way, and people just need to take the time to do research and make sure that the skills that they have matches. And where it doesn't match, you're actually able to upskill. For example, at LSETF, we have free training programs, and I keep saying to my community, guys, you're not plugging into this. It's free in terms of online soft skills. What do I need to gain in terms of putting myself out there? How do I approach? How do I speak? All of these things help to actually boost your profile and help you be employable, and most importantly, help you retain that job. So these are the kind of conversations we are having at LSETF.
And how are you able to get most of this data?
So we have surveys. We put out surveys. So please, anyone out there, if you get information from LSETF or requests for surveys, please respond to us. We also partner with a lot of our stakeholders to actually get information from their own stakeholders and then employers as well. So if anyone out there is thinking, how do I plug in, please reach out to us, info@lsetf.ng. Just share with us your details and someone will reach out to you to ask these questions. And then we also pull data from job sites as well. We also pull data from job seekers when we give them our surveys, and then through our private-public dialogue as well. So it's a bit of data collection and data gathering that goes on.
Right.
And it's a continuous process.
And definitely, when it comes to the labor market, you have, different demographics, you
Correct.
have different mindsets.
Absolutely.
And, there's
Absolutely.
also that conversation about the Gen Z workforce at this
yes,
time.
yes,
Talk
yes.
to me about what you're seeing there.
I must fight for the Gen Zs because I
Okay.
have a few of them in my office.
Right.
And my team are the most passionate team. Honestly, it's just about understanding them. And I'm constantly having that dialogue to say, guys, what do you need to work? So it's not that they don't want to work, it's the conditions around work. And I think that narrative has to change where Gen Zs are being labeled or the youth are being labeled as not wanting to work. In our PPD sessions, you'll be surprised how engaging the youth are. They're literally giving us feedback off the cuff saying, at the last NYSC, blah, 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 this is information that we got in terms of understanding what they need. And they're willing to share that information with us. So I think it's just changing the narrative around the conditions that are being presented to them in terms of how they want to work. Flexi working, for example, I think COVID taught us a humongous thing in terms of people can do good work in the comfort of their home. So letting people know you can work 3 days in the office, 2 days at home, but provided you give me X, Y, Z. Put tasks in front of them, give them key targets that they need to reach, and you see them deliver. So I think it's just making sure that the environment for working is conducive and a little bit more flexible, and you will get the most out of them. Gen Zs or not, even millennials.
Even millennials.
If you do want to work.
At this point. All right, so, definitely conversation still about, boosting MSMEs,
Of course,
at this point.
Yes.
So what do you think should be the first move now? Small business, looking to expand into Lagos. What do you
Yes.
think should be the first move, coming in here?
So I think the first move coming into Lagos is understanding the terrain and what you want to do, getting your LASRA ID. I don't know if anyone is, I don't know if you're aware of this, but it's the Lagos State Residency
LASRA,
Identity
yeah.
Card, LASRA. So it's important that you have that because that's what shows us that you're a Lagos State resident. That's the first thing. And then obviously having all your KYC information in terms of who are you, who's Ladi, what does Ladi do,
Right.
Making sure that Ladi is who he says he is. And then if you then in turn to secure funding or secure finances, it's important you have your house in order. So I wouldn't encourage anyone who's just coming in to say, I want a loan today, I want access to finance, and immediately you apply. Make sure you at least have 6 months worth of data that you can use to confirm, what you've done in the past and all of that. And then I would say ensure you have a clean credit bill. People take that for granted. If you've taken a loan previously,
Especially from the loan apps.
exactly, make sure you clear that out because everyone is connected to the same, talking about data again,
Right.
everyone is connected to the same central data source when it comes to credit worthiness. So at LSETF, even as a government organization, we would not be able to grant you a loan without confirming your credit worthy. Even if it is 2 naira you owe, please clear that up before you approach. But I must say, access to finance is not the only issue. I was reading one of the comments from Honorable Odwole, and she highlighted that access to market is becoming a prominent thing, and that's very true. So part of our interventions is access to market. We also provide access to business support, and that's even one area that I want to speak to for those that are coming in new to this space. It's important that you know how to structure your business, how you store your data, how you record your data, and this is your financial data. So we have business support programs that link new businesses, startups with potential mentors that have gone ahead of them and done this well, and helping them to structure their business. And we've had good success stories from that. We've had people come to us and say, oh, I attended this program on how to structure my business in terms of financial readiness and all of that. And since then, I've been able to hire 2 more people. That's where our intervention is much needed because we're able to create jobs by helping this business structure, what they do. And then access to market, like I said, we partner with MCCTI, we partner with a lot of trade fairs to make sure that anyone that wants to get their produce out there in the right community, they have an opportunity to do that. We have one coming up at LSETF in partnership with LASPAC and the Ministry of Agric in April. in July, look out for that. Next month, look out for that information. If you're a small business and you want an opportunity to showcase what you do in the agri space or the entire agri value chain, it's going to be at the let's say Jakande Park in Alausa. So please look out for information around that. So those are the kind of interventions we do to support that MSME, to set them up for success and let them realize that you're not doing it alone. Everyone's gone through this. You can take lessons learned and don't make that same mistake, but ultimately speak up and reach out for help.
Right. And do you see other states, having this kind of initiative, or is it just Lagos, or are we seeing partnerships?
Yeah, other states have these initiatives without a doubt. Believe it or not, we had, this year alone, we've had Kaduna come to us to just take some lessons learned, knowledge sharing. We've had Kano as well. We've had Ekiti. We've had Ogun State. So we're always willing to share information and share synergy on what has worked for us in Lagos State. And we're also always taking feedback as well. We can't seem to, we don't say we know it all. So we constantly seek feedback from our stakeholders. And then we also leverage on expertise out there to ensure that we're sharing knowledge and we're intervening to support that MSME ecosystem. But yes, other states are doing the same, maybe not in the same capacity, because we are an agency reporting to the Ministry of Wealth Creation. Some states don't have LSETF, like for like, but they also do work with the ministry as well. So we're in touch with other commissioners through our commissioner, Honorable Ajibotafe, to just ensure that knowledge is being shared and the entire MSME ecosystem is supported across board.
And with all the data you've seen, you've gone through, so far, talk to me what you're seeing for the labor market in Lagos, and also how easy is it to get some of this data?
So I already said, if you just go on the website immediately, Lagos LMIS.
No, I mean for you. How do you
Oh God, it's very...
Is it difficult?
It's not difficult. I must confess, it's not. It's just getting the buy-in. Let people realize the value of collecting this data and what they can use the data for. So the more people we have that buy-in, like yourself, the more people plugged in, the easier the data will come forth. So it's not really difficult. It's just getting the more buy-in we need to actually make sure that data is available and ready for anyone that wants access to it. So that's really that's really it. And I think, as I'm sure you appreciate, data is always evolving, right?
Oh, yes.
So the person yesterday that gave us data that he's unemployed has gotten a job today. So that data has changed. You see what I mean? So we constantly have to keep collecting data and enriching data that we have already.
Right. So with all the data collected, so far, what are you seeing for the labor market in Lagos?
So labor market, I think so far we have engaged about 46,000 job seekers. We've engaged about 23,000 students, and also review 24,000 job offers. And we're realizing for job seekers, without a doubt, you need to ensure a like-for-like match when you see a job offer. It's very important. And don't underestimate the power of mentorship to help you put yourself in a better position when applying for a job. And also don't underestimate research as well. For the employers, I said there are different stakeholders. For the employers, pretty similar feedback, but research is key, and using the data and insights to ensure that the role you're putting out is the best value you're getting in terms of how much you're positioning the role at. So that's the kind of information that we highlighted as well. And then for the policymakers, I think it's just for us to know that we have to enforce minimum wage, for example. So certain decisions we need to take that anyone that's paying out there is not paying below, minimum wage. Those are the kind of insights that you could get from Lagos LMIS.ng.
Right. And what are you seeing for remote work?
What am I seeing for remote work?
Yeah.
Nothing specifically just yet, but from the conversations we've had, we're seeing people say that productivity doesn't actually suffer as long as there's trust. So we will be engaging a bit more specific to that at our next PPD session. But we're hearing feedback that, look, productivity, as long as people know what they're supposed to do and the tasks are laid out for them, and there's a way of measuring that productivity, you would actually get results. But we'll come back to that when we have a chance to ask specifically.
We have a lot of people now, working remotely for organizations, outside the country, and
exactly.
they're bringing in foreign currency.
And they're bringing FX, exactly, and that's a medium that we want to tap into, because there are people that have really good skills. For example, the AI is one that's coming up quite very strongly, and we have, as part of our Lagos Innovates program under LSETF, we've partnered with Ingrid, partnered with PLP, and these are people that are giving training to anyone in Lagos State that wants to learn how to code, that wants to learn how to be data scientist, you know, to actually then put them in a position where they can not only service the Nigeria ecosystem, they have access to service other employers abroad. So that speaks to the kind of model you're speaking to. But people can't do that if we don't have data. It's very important that.
Right. So there's hope. You know, if you're looking for a job, you know, out there, there's work to do.
There's work to do.
You know, at this point. Thank you so much for helping us break this down for Ishayo. This is the CEO of Lagos State Employment Trust Fund. Thank you for coming on today.
Thank you so much for having me, Ladi. It's been really good. And thank you to the whole Channels team. I appreciate it. Hello, Lagos.
Hello, Lagos. All right, so still to come on Business Monday, we get expectations for the global oil market. We're seeing dramatic moves with prices there. What does that mean for fuel? That's in a moment. Just stay with us. All right, we're seeing dramatic moves right there in the global oil market. Let's talk to Dumebi Oluwole. She's a senior analyst at Financial Derivatives Company and also an economist. Dumebi, it's been quite the night.
Yeah.
You know, so far in the oil market. You know, starting the week, you'd expect oil will remain at the 70 range and maybe even higher, you know, by the end of the week. But that's not what's happening right now.
Yeah, I mean, it's been a very interesting 24 hours. I mean, even when preparing for today, as of yesterday, we still saw oil prices around 65 or even about close to $70 per barrel. And as of this morning, was far down to about $64 per barrel. It lost about 5% between yesterday and today. So there's a lot of, you know, economic events driving the oil market right now. I think from everything we've discussed over the past couple of years, we know that oil markets are one of the first markets to move when anything, you know, happens globally. And we're seeing the markets generally move in that regard. So first of all, you know, as of yesterday, we're still looking at the, you know, we're still considering the uncertainty around the US's, you know, attack on Iran. As of this morning, we did know about the ceasefire agreement, and that was what actually brought oil prices down. And
we got breaking news from Israel.
Exactly, and as of a few minutes ago, we're also seeing that Israel is saying, you know what, if Iran is not going to, you know, honor the ceasefire agreement, that they're going to, you know, move forcefully, you know. So basically, all of these events just go to show that the markets right now are very, very volatile. But it also tells us that if oil prices, you know, if the events around the US, Iran, and the Israel, you know, entire situation, if it eases, right, which right now still looks very uncertain, but what it means that the markets will react positively to that news, because I mean, nobody wants an escalation of what's currently happening, especially when you consider how significant, you know, Iran is to the oil market in terms of oil supply. So there are two ways to basically look at this, really, when it comes to Nigeria now, bringing it home.
Right.
There are two ways to look at it. The first aspect of it is the external impact, and the second is the internal impact. The external impact, basically, right now with volatility we're seeing in the oil market, if oil prices rise consistently, what that means for the Naira, it definitely means the Naira will be more stable, because, you know, there'll be more oil receipts coming in. Oil still accounts for about 70% of our total export earnings. So that's pretty much good news for the Naira.
But it seems that was short-lived.
Of course. But right now it seems very short-lived. The reason why that is still a conversation we can still have right now is because the market is still quite uncertain. Because if Israel retaliates, what it means that Iran is also going to retaliate. What it means is that the market will price an escalation or a continuation of what we saw a few days ago. And what that means that oil prices could come back up. Right, so that's why that conversation that's why that impact, or understanding the external impact of that, is still extremely important. But if you look at it from the angle of oil prices easing, right, which most likely might be the, you know, likely scenario, oil prices easing to around $60 to $65 per barrel and retaining, you know, the trend within that price range. What it means is that our fiscal deficit, you know, could increase, because oil prices right now are lower than what we budgeted in the 2020.
Even though it was getting closer.
Getting closer to it. But
so you know, do you think the markets reacted too sensitively to the ceasefire news?
I mean, not too sensitive. They reacted the way we all react at we all would react at home. It was very much expected in terms of the market reaction, and the reason is because no one wants an escalation. Right, no one wants an escalation, especially because we've seen how detrimental the Russia-Ukraine war has been. And remember, that is still ongoing. Right, the Israel-Gaza war is still at play.
Right.
So adding this is just too much uncertainty into the market. Global growth right now is forecast to reduce. The IMF and World Bank have, revised downwards their global growth forecast based off of all of these uncertainties. And what that tells us is the outlook for 2025, where we hoped will be better than 2024, is a lot more uncertain right now going into the second half of the year. And that's why the markets are reacting the way they are. Current global, more advanced economies have seen their currencies, move with volatility as well based off of this news. The US dollar is losing steam. We're seeing a lot of movement towards safe haven assets, basically telling us that the markets are trying to hedge against a lot of these risks that we are seeing. And what this also means for emerging and frontier markets, with Nigeria included, is central banks are going to react to this news, right? On the emerging market side, we will see an increase in gold reserve accumulation because that's the trend that we have been seeing going into the first half of the year, and we expect that trend to continue. Why? Because they're going to start trying to hedge against the uncertainty that they're experiencing. Most central banks have their currency, external reserves with the US dollar. So what that means is that if the US dollar loses steam, external debt concerns, debt crisis concerns, repayment concerns will continue to linger. And so we're seeing a fast accumulation of reserves, which we still expect to continue. But on the flip side of it is the monetary policy actions, right? If all of this uncertainty continues, the chances of the US Fed cutting rates towards the end of the year, which they had said,
with the
it
plans
slims
of
down.
2 cuts.
Exactly.
For this year.
So the probability of that happening continually shrinks, right? Continually trims down. And what that means
does it make sense, from what we've been getting from Powell, Fed chair, because we know President Donald Trump has been, pressuring him to cut rates, cut rate now, and President Trump also said he advised the world, don't play into, higher oil prices. Because we know he wants oil prices
to come
lower
down
to help the inflation story. But it seems Powell was right not to cut rates yet.
I mean, we can't blame him for keeping rates high simply because of, again, the uncertainty. It's very difficult to quantify the impact of uncertainty. Uncertainty is as vague as it gets, right? When you're trying to quantify the impact of that, the only thing we can do is we have proxies, right, to estimate how much of an impact it would have. And the first proxy most central banks will look at is inflation. And what is going to drive the inflation, or at least on a global level, is the movement in oil prices and other commodities, right? Especially food items, which we have seen trending upwards, right? So the chances that commodity prices are going to go far lower right now continually slims down the higher uncertainty goes. There is that inverse relationship. The more uncertainty we experience, the less likely that inflation is going to come down because of the commodity-driven aspect of it, right? And so Powell is obviously putting all of those aspects in place. And when you also consider the fact that
Powell sees what Trump doesn't see at this point.
I wouldn't say that, laddie. I wouldn't say that, laddie. But again, there's always that, we've always seen that on a global level and even on a regional level, on a domestic level. A lot of times there is that dissonance sometimes between monetary policy, actions and fiscal policy.
Yeah, the relationships are not that charming.
They are not exactly always going to play from the same book. But the end goal is almost always the same, right? But remember that what is the goal of the Fed chair? What is the goal of the US Fed? Just the same as any other central bank, to keep prices stable, right? And when interest rates are high, when you look at it and when you look at the monetary policy transmission mechanism, the goal is if interest rates stay high long enough, people are going to want to save, investments are going to keep coming in because people believe that, they're going to get higher yields. And if that's the case, it reduces, the supply of cash in circulation, it reduces, increases the value of the US dollar. So the only concern is how much of growth it could constrain if people try to access credit and access credit to expand their operations, and how negative that would now impact GDP growth in the US. But then again, when you consider the fact that the US is just not like frontier markets, right? The stark impact, or the more detrimental, we look at it from a frontier market or emerging market like Nigeria or African economies, right? It doesn't play out as much, right, in advanced economy. So basically, the transmission mechanism or how quickly growth is going to slow, right? It's not that. When you compare that with emerging markets, it's not that there's a very big difference, right, on how quickly it impacts growth.
So let's look at another issue now: fuel. At this point, when oil prices go up, we even got reactions, here from oil marketers. They did say, you're going to have to pay more, for fuel in Nigeria. And now we see this dramatic drop in oil prices. What next?
I mean, we know that prices are very sticky. Right?
Yeah, always sticky.
Always sticky downwards. Sticky downwards, actually, Ladi.
Sticky downwards.
Sticky downwards, yes. So what that means is that they're quick to rise, but slow to fall.
Because I'd like to see the same energy, bringing out those fuel prices. We were seeing with oil this morning. I
mean, we all want that. We all want that. But the truth of the matter is that it will take some time, especially because we haven't yet heard from Dangote on their own changes in price, right? We are now working in a different price regime, right, or market structure specifically, right, for Nigeria's downstream petroleum market. And what that means is that, and I think I also explained the last time I was here, that if you want to know how quickly oil prices, how much petrol prices are going to increase, or the movement in petrol prices, just watch the oil market. Right. And we have seen a very sharp increase in oil price, in all global oil prices, and that's why we're seeing the sharp increase in, petrol prices. It was quite instant, right? But then again, when you consider the 24-hour move, right, or 6-hour move in the global oil market, that didn't necessarily happen in Nigeria immediately.
Right.
So what that tells us that there is still that lag. But the problem now is when you consider all the other factors, right, the oil refining cost, the cost of bringing the crude oil, the cost of salaries, all of the other costs that go into refining the raw material itself and taking it from the refineries to the market, the logistics cost involved. When you consider all of that, it's not so easy to cut prices, right? But then again, right now we're working in a market where there's a price leader now and a price follower, and the market will generally go in the direction of the price leader, right? And right now, that price leader seems to be Dangote, and until we see a strategic move from Dangote, I guess we most likely will have to play in this level of uncertainty and higher petrol prices for now.
Because this kind of reminds me of importers that sell goods. Like they'll tell you, maybe the Naira weekend, and that's why the prices are high, right now. And, some of them might have bought the goods when, it was a favorable exchange rate. But immediately there's a devaluation, they raise prices, even though the stock they have was bought at a favorable Is that what's playing out in the oil market here?
I mean, I could say it's a mix of both, right? Because oil, I mean, you don't just get
maybe some profiteering going on.
Well, I wouldn't exactly call it that, but I would say that there is some element of it. There will definitely be some element of it happening, because we have seen periods in Nigeria where there was artificial scarcity just so prices could come up, right? And that's because of the market structure that we were running at the time, where it was very rigid. There was just one supplier. Marketers couldn't make a profit because their cost was not reflected in their price. But now we are working in a world where cost does reflect pricing, right? And marketers do have that flexibility to make sure that their prices do reflect their cost. We're now working in a deregulated market. But then again, I guess this is where some regulation also has to come in to ensure that that's not the case, right? And like you had mentioned, it's not even only in the petrol market. This cuts across even food markets. It cuts across the smartphone market, everywhere, right? And it's a conversation that has to be happening around general price regulation in Nigeria to ensure that it works for the benefit of the consumer, because they are the ones that will eventually feel the brunt of it. We have heard conversations around, speaking to ensuring that marketers don't, engage in price gouging, increasing price discrimination, so much so that it significantly impacts the consumer, but while still ensuring that they're able to make a profit, right? Those conversations need to happen. The regulation also needs to happen, and that regulatory oversight needs to be much more instated.
Not in a way that it stifles. Gone through a lot.
Exactly. And I know you're their advocate this morning.
Yes. I'm looking out for the consumer.
Yes.
At this point, but we know definitely businesses must also make some kind of profit.
Of course.
But not at the expense of the consumer.
Definitely.
At this point. So I need to see those fuel prices come down. With this dramatic drop we're seeing.
I mean, remember, Ladi, it will take some time.
Yeah.
Right? It will take some time.
Hope the lag doesn't take too long.
Well, hopefully it doesn't take too long, especially in the world where we don't see oil prices sharply increase again.
Right.
So if the
Are we out of the woods yet, though?
No.
With the oil prices?
No, I don't think so. The volatility we do expect to still continue, not until there is some stability with what is happening with the the US, Iran.
There's so many wars at this point.
So many wars at this point. And all of those sentiments are beginning to feed into prices. But I guess the global market right now is pricing this Israel, Iran, and the US dynamics a lot more than the Russia, Ukraine, and this is the focus right now. So I understand where the sentiments are coming, and I guess it's extremely important for us to even see how quickly this escalated and how quickly the markets respond, to tell you how much of a correlation it has on the market. So once anything is going on very quickly between Israel, Iran, Gaza, and all of that, because we didn't see this much of a sharp increase with the Israel-Gaza, to be very honest. The market did react, but not this very quickly. What this is mirroring is the Russia-Ukraine, if anything. And what that tells us is that the market deeply understands the players involved, because Iran is a very strategic partner or strategic member of OPEC, the second largest, producer.
I remember Russia-Ukraine took oil to high about $130.
Yes. So we're definitely playing within
around that range.
Yes.
Thank you so much, Dumebide, for breaking it down for us. And we're tracking everything, because news could come out now that could drive sentiment the other way. Thank you so much for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, we find out what's playing out in the global economy. That's in a moment. Just stay with us. Straight to the global space. Now we have Will Ibong with the details, and I'm wondering, is there any new breaking news?
Like it is always
at this point.
It's always shocking when you think
that I'm on my toes. I don't know what's gonna.
When you think there's a de-escalation of something, and next minute you're seeing updates, and you're wondering, when will this ever end? Will there be a permanent peace or sustained, agreement between countries?
Because I'm up for a ceasefire.
Everyone wants a ceasefire. No one wants. So we saw after that Qatar closing their airports, their airspace, and then reopening it. We saw that with tension easing and all markets, dropping. We saw stock markets rallying, but right now.
Yeah, anything can happen at this
point. Because we're just kicking off right now with news coming in the Middle East. Israel has just accused Iran of violating the ceasefire agreement brokered by the United States less than 3 hours, that's some hours ago, after it came into effect. Israel's defense minister ordered what he calls powerful strikes on Tehran in response. The escalation follows a tense period of back-and-forth attacks, including Iran's earlier missile strike on a U.S. base in Qatar, which prompted Qatar to close its airspace, and shortly after reopened it. Oil prices also fell on the news of the ceasefire. Brent crude is already reacting, now down over 5% to 12% in total. Now to unpack the economic and geopolitical fallout, we're joined now by Mariette Kasana, Senior Country Analyst, Middle East and North Africa at Fish Solutions. Good morning, Mariette. It's good to have you on the show.
Good morning. Thanks for having me.
Mariette, we're just seeing just hours ago, Israel ordered fresh strikes on Tehran, accusing Iran of breaking the ceasefire. What kind of market shock could this renewed escalation trigger, particularly for oil and regional currencies?
So we think that the shock will be minimal. As we've seen over the past 2 weeks, there was no major panic in the markets. We've only seen temporary spikes in oil prices, and they actually remained in the 70s. And this shows that investors are not factoring in a sharp escalation or broadening of the conflict. And President Trump's response to Iranian strikes on Al Udeid base in Qatar yesterday further eased these concerns about a broader and more prolonged conflict. Another good example that investor confidence was not significantly hit in the Middle East is Egypt. Egypt is highly exposed to shifts in investor sentiment. And since the beginning of the attacks between Iran and Israel, we've only seen limited capital outflows and currency weakening. So, and this is much limited compared to previous round of tensions between Iran and Israel. So in summary, we believe that the impact will be minimal since it will remain confined between Iran and Israel.
Okay, you talked about countries in the Middle East or North Africa, like Egypt, always being susceptible to shift in investor sentiment. But let's look at the energy space and how they're probably reacting to that. Brent crude is now down over 5%. That's following the news of the ceasefire. But with this current volatility, with this current update that we have of Israel accusing Iran of breaking the ceasefire deal, how might energy markets react to this sudden reversal in tone?
So again, we might see some temporary spike in the geopolitical risk premium. So we will see a temporary spike in prices. And this was the case after the US attacks on Iranian nuclear facilities over the weekend. But oil prices are more affected by the fundamentals, by if there is any disruption to supply. And since we now think that the risk of disruption to the Strait of Hormuz, which will affect hydrocarbon supply, has receded, we don't expect there to be a large or a long spike in oil prices.
Okay, but from a country perspective, Mariette, how exposed are Gulf states like Qatar and the UAE to prolonged military fallout, both in terms of the economics and politics?
So we believe that the conflict will remain contained between Iran and Israel, and this will limit the fallout on GCC countries. So as long as the US remains on the sidelines, GCC countries will be relatively shielded. And why is that? First, if the US does not get involved again, any repeat of attacks on the US bases in the GCC countries is unlikely. And the second option is that any disruption to Strait of Hormuz, which will have a significant economic implication and disrupt the ability of GCC countries to export, is very low, so this will not even impact them. Now, the GCC countries for the past few years, they've been trying to reduce the geopolitical risk premium in order to attract foreign investment needed for their diversification effort. So this might be a prolonged war or a prolonged period of elevated geopolitical risk might be the main channel in which they will be affected.
You mentioned earlier that there was no risk of capital flight, that markets are not, investors are not taking their money away so soon. But considering the proximity of the major U.S. assets in that region, in the Middle East, including the Al Udeid base in Qatar, are we likely to see a shift in investor confidence? Or if you said there's no capital flight risk, as Iran is setting its sights on that base?
So in the immediate term, we might see some cautiousness among investors and tourists, especially after Iran's attack on the US base in Qatar. But we won't see a panic or severe capital outflows. As I just mentioned above, that a prolonged conflict will keep the geopolitical risk elevated, and this will have some impact on foreign investor sentiment. But once investors are convinced that the that the conflict will remain confined to Iran and Israel, we will see some rebound in foreign investor sentiment.
This instability could have on trade routes, aviation and shipping through the Gulf, especially after that temporary airspace closure by Qatar.
Yeah, so the proximity of GCC countries to Iran and their location in the pathway of the cross-border missiles, we might see some another closure of airspace in these countries. However, that will only be temporary. We can also, since the probability of this tit-for-tat attacks between Iran and Israel remains high and it might be prolonged, there will be disruption to aviation. But with the risk of a broader conflict now receding and diminished after yesterday's event, we believe that the risk to trade disruptions has also declined. We only think that Iran might opt to disrupt navigation through the Strait of Hormuz in an extreme case as a last resort, because it will actually affect itself and its ability to basically export its own oil as well.
What about passenger travel? We've seen that British Airways, suspended flights to Doha. The budget carrier Wizz is also cancelling flights to and from the UAE starting until June the 30th. Is this not going to disrupt, people who are traveling, maybe so for businesses, movement in general?
I think the main impact will still be for foreign tourists, so tourists that are not in the that are not from the Middle East. Once we will see again, once there will be like more conviction that the conflict will remain confined, we might see a gradual resumption in business travel. But I think that tourism will be the one that it will be more affected rather than essential travel and business travel.
And so if this 12-day war, Mariette, turns into a longer confrontation, what's your outlook looking at the global energy security and inflationary spillover for Western economies?
So given that we see a low probability for Iran to disrupt navigation through the Strait of Hormuz and disrupt oil supply, we believe that the impact on global inflation will be limited because the geopolitical premium risk and prices will likely fade. Now, if we take the extreme scenario where Iran is cornered and decide to close the Strait of Hormuz, then the impact will depend on whether the closure is partial or full and for how long it will last. So let's say this happened. If oil prices reach $120 per barrel or $150 per barrel, we might see an increase in global inflation by about 1.2 to 1.8 percentage points. And the surge in energy prices will erode households' purchasing power. We will see weaker global economic prospects, so a weaker global growth. And these factors will also it will weigh on the policymakers. So we are all aware that so many global central banks are currently cutting interest rates. So if we see an increase in inflation because of higher oil prices or higher shipping costs, then they might pause this monetary easing cycle, or they might even hike if inflation spike beyond expectations.
Oh, definitely keep watch of that. Thank you so much, Mariette Kasana, Senior Country Risk Analyst, Middle East and North Africa, Fitch Solutions, for joining us on Business Morning.
Thank you.
So that was Maria Kasana with Fitch Solutions. We'll keep watching the sentiments in that region, from disrupted energy flows to possibly central bank decisions following inflation, possibly inflation hikes because of due to high prices as well. But Ladi, looking at all that is happening now and U.S. involvement in this is where she's mentioned that if the U.S. stays away from this conflict, possibly we'll see maybe a ceasefire coming in and sustain ceasefire. But if the U.S. keeps getting involved, I think it's just going to make this problem escalate even further, because I don't think Iran and U.S. are good buddies right now.
I guess it's a wait and see at this point. Thank you so much, Will, there for the details. And we'll definitely bring you up to date on what's playing out with those markets that we track later on at 1 p.m. Thank you for watching Business Morning. I'm Ladi Williams. Bye for now.